So today we're going to talk about a really important concept of having extremely well-defined risk when it comes to your trades that you place. And some of the best ideas that I can show you are ones where you know exactly where your risk is visibly on the charts, because if you break, let's say, below there in a long position, you might even be able to actually flip the other side. So what we're going to do now is we're going to flip the camera and go to this little thing I have here, and I drew a very simple sort of example. So the green stuff here is your stock price, right? I know this is reflects a little bit, but the green here is your stock price, and the red line, let's say, is your 200-day moving average, right? And the stock price right now has come down. It's still trending higher, right? But it's come down now, and it's now at its 200-day moving average. At the same time, what's happening is that there's this blue line, and let's just say that's the 100-day moving average, and that's all coming together right here where the stock has come down to. Also, it doesn't take too much imagination to see that more or less we are at horizontal support as well. So whatever this price level is a pretty important price level, which is to say that you can put trades here on the long side against this price level and make the bet that this price level will hold. If it doesn't hold and you were to say, let's get stopped out, you might actually have a trade to the downside. That's what we call a confluence area of support, and that's really important. So let's flip to the example I want to show you guys real quick. And the current example that's interesting to me right now, that's very much fits this type of a scenario of a confluence zone, is shares of BOX, B-O-X. You can see the ticker symbol here in the upper left-hand corner. And if you look at this first on a daily chart, you can see the stock, the red line here is your 200-day moving average, and that's where the stock is right now. It's bounced off of here before, and in fact, this entire area here around, let's call it $23, used to be technical resistance, and it now looks like it's going to become support. If we, for a moment, zoom out and go into the weekly chart, what you'll see here is that the stock is actually still trending higher very nicely. So I'm just going to draw a very simple support line, kind of connecting as many dots as possible, right? And so that's kind of your channel. You could also do like a parallel to this, so you can get the whole channel visibly, which usually helps. So we've basically retraced to the lower end of this channel. So now we have basically 3 or 4 things happening at the same time. We're at the lower end of the channel, which continues to hold. We're at horizontal support, and we are at the 50-week moving average, which is the yellow line, which is also basically the 100-day moving average if we go back to the daily chart. So this to me is what we call a confluence support area, where I think one could place trades to make bets on the long side. But again, the greatest thing about all this is that if the stock were to slice through, in this case, the $23 area, you actually have a trading opportunity potentially on the downside, right? So well-defined risk is really, really super important, and I would encourage anyone to look at these kind of trades. Lastly, we did launch our dashboard just yesterday. We have another webinar we're going to be doing today to teach you how this amazing tool works. It's available now to just a few people we're opening it up to. We're holding another webinar today, Thursday at, I think it's at 4:30 p.m. So the webinar link should be down below or in the email if you got this by email. I will see you guys in the webinar, and take care.